Good day, Junior Tickies. I'm Mrs. Brimacombe. We're going to look now at Chapter 2, Activity 5. You are provided with the information regarding transactions relating to Divine Delights Catering. The business is owned by Nina Cooper. Required: indicate the influence the transactions will have on the accounting equation. Use the table provided to record your answers. The business has a favorable bank balance. So if we look at the accounting equation and what is expected, take note of the different format than in the previous chapter, in the previous questions. Now I've included source documents. So in this activity, you need to identify the source document, account debit, account credit. Instead of saying assets, owner's equity, liabilities, indicate will it increase or decrease. Now we've included debit, credit, debit, credit, debit, credit. So it's just a different way in which the accounting equation can be asked. So the first transaction says, the owner, Nina Cooper, increased her capital contribution from 150,000 to 250,000. This was deposited directly in the business bank account. So if you look at this transaction, be very careful. She increased her capital contribution, which means that from 150,000 to 250,000, she's increased it by 100,000. So don't go and say that the business received 200,000. The business didn't receive 200,000. She increased her capital with 100,000 so that her new balance is 250,000. So bank will be debited and capital will be credited. So source document is bank statement. The money was directly deposited into the bank account. They didn't say issued a receipt. So that's why we use the source document as evidence, as proof, the bank statement. Account debit, bank, account credit, capital. And now we don't need to say plus or minus. We just have to say assets, debit, and owner's equity, credit. Number 2. Bought a new cash register from Stony Limited for 23,200. This payment was recorded with EFT. So if I look at this transaction, number 1, a payment was made, so bank is involved. Be careful, you can't write cash register. That cash register will form part of my equipment. So bank will be credited and equipment will be debited. Both is classified as an asset. My source document, EFT, account debit, equipment, account credit, bank, and then asset, debit, credit. Number 3, services rendered for the week according to the cash register rule. The business received money, so bank will be debited. Why did the business receive money? Services rendered will always be shown as fee income or current income. And that will have a positive effect on my owner's equity. My source document, cash register roll, account debit, bank, fee income, credited, debit assets, credit, owner's equity. Number 4, the bank statement received from Nedbank indicates the following. So there's cash deposit fee, 250, and income received on favorable bank balance, 145. So there's 2 different transactions that happened here. Number 1, bank is involved because money was paid from our bank account and money was received. Number 2, we need to identify why did the business receive money and why did the business make a payment. So when we see cash deposit fee, that will always be shown as bank charges, which is an expense to the business, and it will have a negative effect on our owner's equity. So we start with the first transaction, number 4. Source document, bank statement, account debited, bank charges, account credited, bank, asset, credit, owner's equity, debit. And then the second part of this, interest received on favorable bank balance means bank was debited and account credited, interest on current account. It's an income which will have a positive effect on my owner's equity. You don't need to write bank statement again. All we're going to write is bank is debited, interest on current bank account is credited, assets, debit, owner's equity, credit. Number 5. Nina Cooper made an electronic payment to Fix-It Motors to pay for repairs done to his personal vehicle, $10,500. So be careful with this one. Just because the word written repairs is in there doesn't mean this is repairs done by the business. It says personal vehicle. That means that bank and drawings is involved. Anything that the owner takes for personal use must always be shown as drawings. So we start off with bank is credited because a payment was made. Account debited, drawings. Source document, EFT, account debit, drawings, account credit, bank. Assets, credit, owner's equity, debit. Number 6. A loan was taken out from FNB Bank for $80,000. The money was paid directly into the business bank account. So this means that the business received money. If the business received money, it means bank is debited. Why did the business receive money? We took out a loan. That money was paid into our account. That means that we will owe FNB Bank $80,000. That's why our liabilities will increase. If you've just written loan, that would have been wrong. You need to indicate the name of the bank. And because this money was paid directly into our bank account, our source document is bank statement. And now we just have to complete the information on the table, which means bank is debited, loan, FNB Bank is credited, assets debit, liabilities credit. Number 7. Received commission earned from super traders 12,850. Issued receipt number 018. So the business received money, bank is debited. Why did the business receive money? Because of commission income. You cannot just write commission. You cannot write commission earned. This is shown as commission income. It's an income that will increase our owner's equity. Source document, duplicate receipt, a reminder. The business always keeps the duplicate, the customer gets the original. Account debit, bank, account credit, commission income, assets debit, owner's equity, credit. Remember that the T accounts is a tool for you to use if you are not sure how to record it directly on your accounting equation. Number 8. Paid Telkom by debit order to pay the telephone account, 2,234. So if we look at what is the meaning of a debit order means that I've given someone an instruction, permission, whatever I owe them, that money must be deducted from my bank account. So in this case, I gave Telkom permission that whatever I owed them must be deducted from my bank account. And that's why when we look at this transaction, bank will be credited because a payment was made. Why? Telephone, we pay Telkom, that is an expense to the business, and that's why it will be debited. It will have a negative effect on my owner's equity. So my source document is bank statement. This will be shown on the bank statement, debit order, Telkom, 2,234. So on my accounting equation, telephone, the expense account is debited, bank is credited, asset, credit, owner's equity, debit. Transaction number 9. Drew cash from the ATM to pay the 4 workers their weekly wages. Each worker earns $2,500 per week. So we withdrew money from our ATM. But now remember, we've got 4 workers. and each worker earns $2,500 per week. That's why we need to take 2,500 and times that by 4. Account credited, bank, account debited, wages. It's an expense which will increase on the debit side. It will have a negative effect on the owner's equity. My source document, ATM or bank statement. Account debit, wages, account credit, bank, asset, credit, owner's equity, debit. Number 10, paid plastic wholesalers for packing materials by EFT 1,250. So account credited, bank, why? Because we bought packing material. Sometimes a common mistake is we write plastic wholesalers. That is not an account name. You need to identify what type of account is involved. That is the packing materials, which is an expense to the business, which will be debited, and it will have a negative effect on my owner's equity. My source document, EFT, account debit, packing materials, account credit, bank, assets credit, owner's equity, debit. Transaction 11. Received an EFT payment of $737 from CNA traders for stationery returned. So this is a little bit different. We've now received money electronically. That means bank is debited. Why? We've returned stationery which we've purchased. So now that's no longer an expense to the business because we've returned those items. So when our expense decrease, it will have a positive effect on my owner's equity. Now please be careful. Received an EFT, the source document is not EFT. We will use our bank statement as proof, as evidence of this transaction, that the business actually received 737. Account debit, bank, account credit, stationery, assets debit, owner's equity credit. Number 12. Did an electronic fund transfer in favor of FNB Bank to repay the loan 2000. So now we've made a payment. We remember earlier we took out a loan, that money was paid into our bank account. Now we have to start paying back that loan. When we pay back the loan, bank will be credited and loan FNB will be debited. Our liabilities is going to decrease. My source document, EFT or bank statement, account debit, loan FNB Bank, account credit, bank, asset credit, liabilities, debit. Thank you very much. I hope that you have a better understanding of source documents. It is so important that you understand the different types of source documents with the different types of transactions. Now we're only busy with cash transactions. Later on, we're going to add more type of transactions. Credit purchases, sold on credit, returns by debtors, returns to our suppliers. So these are all different types of transactions, which means it has different types of source document evidence, proof that that transaction took place. So it is really important that you understand source documents and how to use them. I want to leave you with this quote: you won't always be motivated, so you must learn to be disciplined. Have a wonderful day.